So the pricing has gone down for lower FICO scores, like 640 and below, and lower down payments. The pricing for the money has gone down. Doesn't mean you're getting a better interest rate than the guy that's got a 750 FICO score, but it means the cost of that money is going to be less.
In the May Market Report episode of the SLO County Real Estate Podcast with Hal Sweasey, Hal, JT, and Jay talk about some of the policies that are changing for those with lower credit scores and break down all the numbers from all the communities in the county and find with just 84 houses coming to the market, the pickings remain slim and the prices aren't really going anywhere as a result. In a sea of real estate headlines, you've come to the right place for your information. Hal, JT, and Jay are doing this every day, and this is what they are seeing every day. Now your May 2023 market update for San Luis Obispo County with your host, James Bueno.
It is market update time, my favorite time of the month. That sounded weird, but it is the favorite time of the month. And numbers. Let's talk about numbers, Hal. What do you got?
Okay, so thank you for that warm introduction, James.
I didn't. You just took it someplace I didn't want to go.
So yeah, we just finished the month of April in San Luis Obispo County, and we're noticing a lot of things. And I'll get into the dry, boring numbers part, but there's a lot to read into these things. And boy, can John Turner read a lot into something, because he's gonna let loose on this in a minute. So if we just look at what's happening with homes for sale, we are actually up about 228 from 186 a year ago. So about 20% more homes this end of last April than last year. So that's actually healthy, and we needed that, right? Because we were coming off all-time lows. Our pending sales are down about 17%. But if we look at month over month, I'm going to back up. Homes for sale, we actually have fewer homes for sale end of April than we did the end of March. Okay, so usually the inventory builds as we head into the summer. Right now, this month over month, we're going down. Okay, so when we look at the trend, if we go back a year, okay, yeah, more. Over the last month, we're down again, and I'll get to why in a second. And then we look at closed sales. This is going to be the shocker. This will be in the news, but we're down about 40% closed sales this time this year versus April 2022. We are up about 10% over March. Okay. And then lastly, we look at like the new listings coming on the market. This is really interesting. So we only had 84 homes come up for sale versus 107 last year, so less coming on the market. And if we go back to that number, where 189 in the course of a month went in escrow, that is almost double. That's more than double homes going into escrow than new homes coming up for sale. John, you want to add to that?
If you take out the number of listings that you took last month out of this equation, oh my gosh, you had your best month of the year so far, and the total number of properties you're bringing to the market.
Yeah, we had a productive month.
Yeah, but so you take your listings out of that number, and that number's really bad for an entire county.
Exactly. Yeah. So we're going to see the same trend. If we see 189 going into escrow and leaving, and only 84 coming back in, that number will continue to shrink. Right. So we've seen a huge reduction in price in inventory. And what we're also seeing, and Jay, you can speak from the brokerage level, but boy, oh boy, lots and lots of multiple offers.
Yeah, it almost feels like it did when rates actually were in the threes.
Right.
Because I think people have, and you've said it in previous podcasts, that they've kind of settled into, okay, the new norm is,
right,
we're floating in the sixes, and historically still below average as far as 30-year rates go. Bunch of market indicators are leading us to believe that rates are going to come down this month.
Right.
We've talked about Barry Habib in the past. Like he's got a date. I mean, that guy's crystal ball said May 10th, and we'll see how clear his crystal ball is here in just a few days. But rates are definitely going to be, for a variety of reasons, coming down. And when they do, there's going to be even more offers coming because more people will be able to qualify. And that's why the buyers now have jumped off the fence. They're trying to get in before the bloodbath really starts.
Right. I've watched Barry Habib on YouTube a few times recently, and I thought a month or so ago that he said rates are going to come down on May the 10th. But you know what I heard the next time I listened to it is I think what he said was that economic news is going to come out on May the 10th that should begin to drive rates down, so that by midsummer is when we should see the lower rates. Not that they were going to come down on May the 10th.
That would be a much more reasonable approach to a prediction.
Yeah. But to your point, I think all of us that are in the business and follow it on a daily basis believe that rates are going to turn south here sometime soon. We just don't know what sometime soon means. If it's 2 months, 6 months, a year.
I would suggest just looking at, what's one of the key indicators, right? The yield curve inversion. When it drops below zero, we know, and historically, you look at the last 30 years of tracking this metric, we go into a recession. Recession is around the corner. It's almost inevitable, unless history isn't going to repeat itself, which is something it usually does. We're going to go into a recession. What does that mean?
I just heard they changed the definition of a recession. I'm serious. Yeah.
Really?
Yeah, and what it means. So this is way above our heads, but yeah, it means a slowdown in the economy, right?
Yeah. And when you're looking at 13% of the overall economy is real estate numbers, right? It's a big chunk.
Closed sales are down year over year. How much are they down?
Closed sales are down. So we had 247 closed last April, 147 this year. That's
so
about 40%.
Significant.
Significant number. Yeah.
But I always like to go back and look at the prior month. So how are we trending month to month?
Month to month. I think I mentioned that. So you're going to make me double check my.
Do your math, huh?
So last month we closed 160. So 147. So a few more closings in March, right?
So we're down a little bit.
And we had more homes to sell, but that's why.
Okay.
And let me give you an anecdotal or
good.
boots on the ground experience, because we've made several offers lately, like all cash, no contingencies, 7-day escrow, multiple offers, 7-8 offers, and our clients didn't get it.
Wow.
Okay.
7 days?
Like 7 days.
I mean, we get that's cash and 10% above the list price.
Probably, yeah. 850 to 940 or something like that.
Yeah.
And then we were in second place. So here's what we see. Interest rates are super important to a lot of people, and what we see is a lot of people that live here now have the ability to buy without getting a loan, or even if they do get a loan, they're so well qualified. So the composition of the level of financial resources that the people we see around, and I've talked to this about before, it's really showing up. We used to have a ceiling in San Luis proper. Like if you were renting a house for $3,500, good luck finding somebody to rent it. Now you've got houses renting for $4,500, $4,300 that would never have rented. Yeah, $5,000. You see the numbers.
Yep.
So the cost of things is definitely higher, and the people's ability to afford it is higher. Now, fortunately, John would point out wages for the most part are higher, and the people that don't even have wages are doing very well. They're here as well. So that's just what's happened in the county.
What's going to create the frenzy again? What interest rate are people waiting for?
When it drops below 6, I think 6 is going to start it. When people see 6.0, as soon as it drops below 6, it'll be almost it'll be an absolute frenzy. Oh, and I want to correct myself. I made a comment earlier that 13% of the housing was the CPI. It's actually 32.7%.
Makes up the CPI, Consumer Price Index.
32.7%
is based a lot on housing.
Yeah.
And so the Barry Habib, are we getting paid because we mentioned him? So I think what I understood him saying is that is such a trailing indicator because they go back like year over year.
12 months, yeah.
Yeah.
So it's a rolling 12 months.
Yeah, and so it's very, very delayed. I get what he's saying, and everything is pointing to what he's saying. And we'll see what happens.
Well, I think a big part of that is inflation. So 12 months ago, so May of last year, our interest rate was at 12%, or the inflationary rate was at 7%. And today, it's at what? Even if it's at 6% today, that's a 20% reduction in inflation. Headlines should be reading, inflation rate falls by 20%. Last April, the inflationary rate was at 6, so we were at par. And now because the inflationary rate was so high last year this time, we look like we're doing incredibly well.
Well, you do because you're dressed well and you got that beard thing going on. So you look like you're doing very well.
If I let it grow out, I'll end up looking like Santa Claus.
Yeah.
Hey,
Wow.
Don't be bad mouthing Santa Claus.
Oh, he's a good dude.
He pointed to his left to JT on that. It was falling over.
Just FYI.
So then, pricing. People are always curious about pricing, and then we're going to quote some prices, and then John's going to poke holes in it. But it's one barometer, and one we just track is, okay, 7 houses closed in Morro Bay. On average, it was $1,154,000. Okay, that was the average price. So some went for more, some went for less. A year ago, we had twice as many sales, 15. That average price was a little bit less, $1,126,000 last year, right? So interesting. And then let's slip on over to like San Luis Obispo. Okay, so this year we're at $1,067,000 for the 26 closed. Last year we were at $1,002,000. So the average price was higher at $1,002,000 than this year. But if I look at what's pending, there are 30 homes in escrow. That average price is 1.2, what they closed for last year. So we're starting to see, because of the low inventory and the continued demand, there is pressure upward again on prices. It's happening.
Headlines, I can see it coming. Prices are down $134,000 a unit in San Luis Obispo, or prices are down 11%. Do you believe that? Cayucas, my favorite community. Prices are down 46% in Cayucas if we look at this data. Now, that's because one house sold in Cayucas last month versus 4 the year before, and that house was $1.1 million below the average price a year ago.
Well, it was a tear down, and they're going to build a $3 million home on the lot.
But again, the press picks up this data, and the headlines are Cayucas houses drop 46%. Really?
Yeah.
Okay, let's go back to San Luis because that's our biggest community. Housing prices down 11%. Now, how you are in the process of listing a home in this community not that far from the office.
Right.
And I think it's coming on the market in, what, a month?
Yes.
Okay.
Yeah.
And unless something were to change in the next 30 days, it'd come on the market at $1.6 million.
Yep.
Somewhere
Just
around
right. Yeah. About $1,585,000. Yeah.
Okay.
Yeah. You're right.
Okay.
All good.
Okay. So
I'm on your side on this one.
there you go.
Okay.
I love it. But and so maybe a year ago, if you were listing that house, would you be listing it for more or less than $1,585,000?
Probably less. And the reason I'm hesitating, John, is it's because I know what we're trying to do is make a apples to apples comparison, right? And that's usually easier with like a house and a tract with 3 plans, or like a condo, right? So we had a condo over on King sold for $649,000. Well, that's the highest recently. That's the highest sale we've ever had in that complex, and it happened this year, not last year. So yeah, I would say it would probably be less because, well, there's just not as much for sale right now, and there's still plenty of buyers that want to buy here.
So sometimes the metrics we read are just a snapshot of a very small window of time and a very small statistical number to analyze. So therefore, if we go back to stats class in college, our standard deviation gets really, really big.
Yeah, you don't.
And what we're saying is it's not statistically big enough to even analyze and come to a conclusion that is accurate.
Right.
We hold you as as close as we can come to an expert in the local real estate market. So can we talk about a couple other communities? Just
absolutely.
Yeah. So for our North County and our South County listeners, let's get some of those numbers.
Yeah. So so let's go down to Grover Beach. Grover Beach seems like that community is evolving and changing over the last few years, and we only had 6 sales, but it was up $272,000 per sale over a year ago, or 42%. Now, my guess is all home values in Grover Beach are not going up 42%, but it seems like Grover Beach is a community where we still have some escalation in home values. Would that be a fair comment?
Yeah, I think so. I mean, to think from my 32 years of experience that the average price last month was $977,000 for homes in Grover Beach, I never would have thought it. I remember when they were 130, 120, whatever. And now you think about that, and versus last year when they were 645, so that's the difference John's talking about. Could they have been some higher end homes? For sure. Are they up 42%? No way. Are they down? No, I don't think so.
I don't think they're down.
I mean, that's your starter house at $500,000 or $600,000 in Grover Beach, and that's going to take some love to get it, not to be a starter home.
Yeah, last year at 645, that was okay. The window's closing, guys. The first-time home buyer, that's the highest most first-time home buyers can go.
Yep.
And now we're looking at 917.
Right.
What?
I know.
Okay, so let's move next door to AG. Rio Grande, 21 sales this year versus 27 last year, up $257,000 per sale. or 27%. So do you think housing values have really gone up in AG 27% in the last year? We
It
sold
sounds like the
bigger
average
houses.
price went up.
It sounds like the average price. But do you think home values
No.
in AG are really escalating at that rate?
Nope. We're not going to hear that on the news.
We're
You're going to
not-
hear it on
no.
this
Yeah, we're
podcast.
not seeing
You heard it
price-
here.
You heard it here
Heard it
first.
here.
We're not seeing values going backwards either.
No.
Yeah, exactly.
Yeah.
Okay, let's do one more because it's connected in the 5 cities area. Pismo's down 160,000, although it was only 8 sales. Again, not a statistical number that's large enough to draw a lot from that. But do you think housing prices are going down in Pismo Beach and they're going up in Grover Beach and
Nope.
AG?
Just had
Yeah.
a couple in the Andrews tracks down there, and I mean, they went for phenomenally high prices.
Yeah, and
Yeah.
and you've got one that you're bringing to market here
Yep.
soon,
Yep,
and listed somewhere around 1.5. Is that right?
correct.
And again, I'm going to ask you a question. You already just told me a second ago you don't like the question, so I'll ask it again.
We would expect nothing less from you, John. Nothing less.
This is why we get along, right?
Yeah, exactly.
A year ago, would you have listed that house for 1.5?
No, that would have been less.
Okay.
Yeah.
God, I feel like a lawyer interrogating the witness.
Yeah.
Okay,
Sounds
let's
like
move,
it.
let's move up to North,
Guilty as charged.
North County. Paso. 16 properties sold versus 41 a year ago, minus 160,000 per unit. You live in Paso, right, Jeff? You think your property went down in value in the last
No, in
year?
fact, we've only lived in it 2 years, and we just got a decent amount of cash, and we don't have that much. I mean, it's gone way up in just 2 years. I mean, our house we bought at 570, and it's
Got appraised,
it
right?
got
for the
appraised
HELOC, yeah.
at 720, I think. So
That's
yeah,
That's
I mean,
better.
Yes,
That's better.
That's
lot
a
better.
good number.
Solid,
Yeah.
Yeah.
So the average sale was down 160,000 or 21%. Probably just the actual houses that closed were on the
Well,
lower end of the price.
They're talking about 41 homes versus 16 homes.
Right.
Right.
Sample size.
Yeah,
Small
the sample size
sample
is so small compared to a year ago.
Yeah.
And your entry level buyers are struggling more.
And we've talked about interest rates impacting the ability to purchase, right? What are we buying power,
Buying power, yeah.
right? So
And that changed Monday. The buying power for lower qualified individuals actually changed May 1. And so I know there's been a lot of publicity about that. And I'll talk about it briefly, is that those that have lower FICO scores and lower down payment amounts, that loan has actually gone down. It went down May 1. And lenders have been pricing that in for the past 45 days because you can't they don't want to lock a loan in and then have to change the pricing. So the pricing has been adjusted for what happened on May 1st, which was Monday. So and it's the policy of the policymakers, right, to try and get close the gap between those that have great FICO scores and down payment amounts to those that don't have great FICO scores and large amounts to put down. They're trying to close that gap so that more people can get into homes. And I suggest anybody that's out there listening, reach out to your lender. If you're in a position where, I just can't buy a home because of my FICO score, and we're talking about FICO scores way below 7. So the pricing has gone down for lower FICO scores like 640 and below, and lower down payments. The pricing for the money has gone down. Doesn't mean you're getting a better interest rate than the guy that's got a 750 FICO score, but it means the cost of that money is going to be less.
So your upfront costs, your
Correct.
points, your fees, your this and
Yep.
that have been reduced for
On
the
the lower
borrower with a lower credit score
And let lower down payment. Yeah.
and the down payment requirements.
Yeah.
So they're loosening the lending standards.
Yeah. Wow.
Yeah.
Last time, when that? Well, last
let's
time
not
that
talk
happened?
Oh, don't go there.
2000s.
Yeah. Don't go there.
now there is another side of that equation, right? If a company needs to collect X amount of dollars and they decide to collect less from half the people, then the other half have to pay more.
Well, welcome to this. We'll call it the Social Republic of United States of America. But yeah, that's exactly right. So the people that are paying for that, they're not getting the discount, or the people with 740 FICO scores and greater with more money down. They're actually covering the burden and cost.
But we don't want to scare away the people with the higher credit scores to say, to heck with it, just
They're getting better rates.
They're still getting the better rate.
Right,
Yeah, they're
yeah.
getting the preferred
Just
rate.
the cost of the loan is.
Yeah, they did things right. They've paid their bills. Their FICO score is up. They've saved money. They're getting the preferred rate. So over the life of the hold, that is absolutely going to be beneficial.
Yeah, they're lower risk.
So we're still coaching our kids and our kids' friends to pay their bills on time and
it
and create good FICO scores.
A rate,
Yeah.
the cost of them, we're talking like, a half a point. It's not a whole lot of money for at a one-time shot, but sometimes that's that little extra is what can push somebody who's that almost can qualify for a home. And JT, you said it in the past, like stretch a little bit, get a little past what you can afford. You'll never be disappointed, and you'll find a way to make it happen. This is for those people that are right there that are trying to find a way to stretch. They just got a little bit of an advantage to be able to maybe cross that bridge so they can get to the other side of home ownership.
Isn't it interesting that we talk about the Federal Reserve, right, raising rates up to control inflation? Mm-hmm. Housing's a big part of that. So we're trying to slow it down, right? And then all the things we're doing right now to okay, let's get more people in the housing market. It's just weird. There are two policies like working against each other in my mind, right? So that's not for us to decide. We're just here explaining what the landscape is. So at the end of the day, John, you made a good point about what median. We didn't talk about median so much, but we just do average prices here. But again, both of those are statistics that don't really reflect whether Jane and Joe's house is worth more than a year ago than it is today than it was a year ago, right? But Jeff, you made the point. I mean, yours appraised. Has it been 2 years?
2 years, yeah.
550 to 7 what?
70.
570 to 720.
Okay, so that's a pretty healthy chunk of appreciation.
We were happy with it.
Yeah.
I don't have my calculator, but it's got to be 30% without just
Or more.
Yeah,
It's significant. So that's a great example. One house and the difference. To me, that's how you make a comparison on which way the market's going. If people, hey, is it up or down? Well, there's so many ways to answer that and so many ways to compare it over.
Well, you guys have brought it up frequently. It's like prices of the properties have not come down that much. I mean, I think you said it on a couple of podcasts ago, Jay. It's they've stayed flat, but flat's not a bad word in this instance. It shot way up and then just stayed where it was at from 14 months ago.
Yeah, and again, you look at the real estate. I look at real estate as a long-term hold. I'm not day trading with my real estate, right? It's a buy and hold. And if you were to invest in the stock market 40, 50 years ago, Vanguard Index Fund, you're up considerably over that life of the hold. Same thing with real estate. If you're going to buy a property to live in, you want to raise your family in it, hang on to it. You're going to win.
Yeah.
You're going to win.
I sent this quote to some of the folks on the team earlier this week, and it was from Honest Abe, Abraham Lincoln. He said something like, "Those who wait get what's left over from those who hustle." Huh. I wonder how that fits the current real estate market.
Yeah.
So if you're thinking about doing something in the market, do it.
Might be a good time.
Don't think about it.
Yeah.
Just do it.
I don't think thinking's ever made anybody a cent. It's the doing that makes
Right.
Sure.
that builds the wealth.
There's a big shoe brand out there that says "Just do it." I forget
Just
what
do
it's
it,
called.
yeah. Do they say just do it meat?
Just Bull Durham.
How do you think? Just think about it. We'll do. If we did just think about it.
Just think.
Don't do it. Think about it.
Sounds like my mom when I was young. Just think before you do that. Just think about it. Right?
Yeah, think before you act, Harold.
All right. So those of you that are interested in home valuation, you want to see what your house is worth, you got a couple of options with us. One, you can give the man himself a call, Mr. Hal Sweasey here at the office, or you can go to our website, halsweasey.com. Click on the sell your home link, and then it comes up home valuation. You can fill out your info and kind of get some information on your house there. But I would recommend giving Mr. Sweasey a call. He would love to help you out. So, gentlemen, does anybody have anything else before we call it quits for today? Nope, we're great.
We've said it all.
We've said it all. Everyone, thank you so much again for listening, and we will see you next week. Thank you for listening to the Hal Sweasey podcast. Be sure to subscribe and rate this podcast. It comes out every Monday, so check for it in your feed for the latest information on the San Luis Obispo County market. The SLO County Real Estate with Hal Sweasey podcast is available wherever you get your podcast and on halsweasey.com, where you can find current listings and other real estate tips. halsweasey.com, that's HALSWEASEY.com. HalSwayze.com. I am James Bueno, Director of Marketing for the Hal Sweasey Group. If you're looking for anything real estate, give us a call, 805-781-3750.
Hal Sweasey is a licensed California real estate broker. DRE number 01111-911. The SLO County Real Estate with Hal Sweasey podcast is a production of AGM Podcasts. Subscribe wherever you get your podcasts.